Hello everybody, William Jordan here. So like I promised in my previous videos, we're going to start looking at the different candlestick patterns and formations starting off today. However, I do want to point out that the things I'm going to talk about in my videos isn't a sure thing, okay? The market has a mind of its own. It's alive. No, seriously though. There's never 100% sure way to know which way an investment's price will go. But the things I'm going to show you are just there to help you out, better your chances overall. And if you follow the advice I give you, and it works most of the time, you should see your profits go up. So let's get into the first candlestick patterns today, starting off with the shooting star. Okay, so the shooting star is a bearish reversal pattern. And from my previous video, you will remember that this is an indication of a possible market turnaround during an uptrend. The shooting star is a small yet effective way of signaling a bearish trend to come. So breaking down the candle, the body of the candle can be either red or green, or of course other colors depending on the software you use. But the red candle is slightly more bearish than the green candle. So as I said, the shooting star is a bearish reversal pattern. It is made up of only one single candle. The body of the candle is very small and the wick above the candle's body should be at least twice the length of the body of the candle itself. Ideally, there should be no wick at the bottom of the candle. However, a small wick can be allowed. For a shooting star reversal pattern to be effective, it must be situated within an uptrend. If there is no uptrend or it is situated in a sideways moving market, it is not a valid reversal pattern and you're better off staying out of the trade. So once again, uptrend and then you see a shooting star. At this point you can start thinking about entering a short trade. Confirmation of the reversal pattern comes when prices start trading lower following the shooting star or once you see the trend reversing. Entering into the trade is all dependent on how conservative of a trader you are. More aggressive traders will enter a position as soon as prices trade below the shooting star pattern, and more conservative traders may want to enter when prices close below the shooting star pattern, when the next candle closes below the pattern. And even the most conservative traders will probably want to wait for one whole candle to trade below the pattern. This all depends on each of us individually and our personal level of conservativeness. Remember that the more you wait, however, the more price action has passed you by. So which of these four candles are valid shooting star patterns? We can see that all four candles have small bodies and all of them have wicks that are at least twice the size of the bodies of the candles. So if they occur within an uptrend, they are all four to be considered as valid shooting star patterns. Confirmation comes when you see the prices trade lower as the reversal is taking place. So let's look at the psychology behind these two shooting star patterns. Who is in control, the bulls or the bears? In the first candle, we can see that the price opened up right here. The bulls drove the prices up to the height of the candle. Now remember, at this point, this candle is a large green candle. Then all of a sudden, something happened. People maybe started cashing out and taking their gains from the uptrend, or more sellers came into the market, and the overall bearish sentiment pushed the prices down to the close of the candle right here. Clearly, we can take from this that after hitting the highs, the bears came into control because of the large amount they pushed the prices down. With the second candle, also situated in an uptrend, the prices opened up right here. And once again, the bulls pushed the prices up to the tip of the wick, which at this point, of course, is a large green candle. Same thing, sellers came into the market and pushed the prices down to the close of the candle right here. So from this, we can clearly see that the red candle is more bearish, since the prices were pushed down past the opening price of the candle, whereas in the green candle, the bulls still had an overall victory, even though only slightly. During an uptrend, you see a shooting star. Has the bullish sentiment been reversed? Maybe so. However, there is always a slight chance of the uptrend continuing after you see the pattern or a period of side movement in the market. That is why you have to wait for the confirmation before getting into a trade. So how would you trade this pattern? Let's say you were in a long position. During the time the market was trending upwards and all of a sudden you see a shooting star reversal pattern. This could be a good time for you to cash out of your position, take your winnings and stay out of the market for a bit. Or maybe move your stop loss a bit tighter or placing a trailing stop. This is just so that you can ensure some winnings in case of a reversal after the pattern. On the other hand, if you were not in a position, you see the shooting star come up during an uptrend, this could be a good time for you to get into a short position and be bearish on the market. Just remember for the confirmation to take place before you go into your short position. So let's look at some real-life examples. Here is Apple on a 5-minute chart. We can see the nice uptrend the stock has before there was a small period of uncertainty, and all of a sudden we see the shooting star reversal pattern. If you were in a long position, this could be a good place for you to exit your trade and cash in some of your winnings or move your stop in closer. However, if you were in no position, this could be a nice spot to start thinking of entering into a short position. Remember to wait for the confirmation, and depending on how conservative you are, you could then enter into a short and make some money as the prices go down. Here is another example. Zillow, also on a 5-minute chart. Even though the uptrend was much shorter and somewhat more choppy, we can see a nice shooting star reversal pattern right on top. Good place to exit your position if you were in a long position or get ready to enter into a short trade. As soon as the confirmation shows, you could enter the trade and ride it all the way to the bottom. So this is how you would trade a shooting star bearish reversal pattern. Okay, if you were in a long position, this could be a good spot to get out of your position. If it depends also on how long you plan to stay in the position, how much you're in it, your strategy, etc. But if you are not in a position, this could be a good point to enter into a short position. Remember to wait for the confirmation because, like I said in the beginning of the video, there is no 100% sure way of knowing what the market is going to do. So entering into a short position, hang on, wait for the confirmation, because just in case the shooting star reversal pattern doesn't work out, you are not risking too much on it. Also remember to place your stop losses, okay? If you are in a long position, this point you can move in your stop a bit closer. If you are planning to go into a short position, remember to place your stop loss just in case the shooting star reversal pattern doesn't pan out. So let's take a look at another bearish reversal pattern, the hanging man. I don't think I have to explain why it is called the hanging man, you'll just have to use some imagination for that. Same as with the shooting star, the hanging man bearish reversal pattern can be either red or green. As with the shooting star also, the hanging man is made up of one single candle with a small body and a wick that is at least twice the length of the body that comes down from it. A small wick at the top of the candle can sometimes be found, but in perfect trading conditions there should be no wick extending from the top of the candle. Remember that since the hanging man reversal pattern is a bearish reversal pattern, it should be situated within an uptrend. If there is no uptrend, once again, and you come across this pattern, it is not a valid reversal pattern and should not be considered as such. Once again, we look for an uptrend, followed by the hanging man reversal pattern, followed by a downtrend for confirmation. More aggressive traders will enter into a short position once prices trade below the candlestick pattern, where more conservative traders will wait for prices to close below the pattern, and even more conservative traders will wait for one full candle to trade below the hanging man candlestick pattern. So let's look at these 4 candles. Which of these 4 are valid hanging man candlestick patterns? They all have wicks protruding from under the bodies of the candles, which are at least twice as long as the candle bodies themselves, and hence, if they're situated within an uptrend, all 4 of these candles are valid hanging man reversal patterns. Remember, confirmation only occurs as soon as prices trade below the hanging man reversal pattern. So for the sentiment, we can see for the green candle, prices opened up right over here, and the bears in the market push the prices down to the lows of the candle. At this point, this is a large red candle. Then the buyers come back into the market, pushing the prices up past the opening price to the close right over here. For the second candle, the prices opened up right here, and the bearish sentiment made the prices go down to the lows for the candle, making it once again a large red candle. Before bullish sentiment came back into the market, pushing the prices up once again to their close right over here. So is this bullish or bearish? Now, coming out of an uptrend, one can say that these candles are bullish, since it was the bulls after all that drove the prices up in the end for these candles. However, there was a point where the bears were in control in these candles, since they did form large red bodies, and as such, the bears could maybe have shaken the bullish confidence in the market. The only way to be sure is to wait for the confirmation following the pattern. The red candle is more bearish, since the bulls couldn't drive the prices past the opening price of the candle as they did with the green candle. So let's have a look at this. Which is more bearish, the shooting star or the hanging man? In the shooting star, prices opened up right over here, and more buyers than sellers were in the market, pushing up the prices to the tip of the wick before the bears came in, driving the prices past the opening price down to the close right over here. In the hanging man, prices opened up right here, and then the bears drove the prices to the lows of the candle before the bulls came in once again, driving the prices to the closing right here. From this you can easily see that the shooting star is a lot more bearish than the hanging man, since the bears had the final say in the sentiment behind the candle, whereas in the hanging man it was the bullish sentiment that was felt a lot more near the end. Let's see Facebook on a 10-minute chart. This is an interesting one, since we can see some very strong bullish sentiment behind this uptrend. The candles are very large and mostly green before we see the hanging man reversal pattern. If you were in a long position, this could be a good place to exit your trade or move your stop in a bit closer. However, if you were not in a trade, this could be a good place to get yourself ready for short selling the stock. What is interesting though is that as we wait for confirmation, we see a shooting star pattern form followed by another hanging man. More aggressive traders would have gone into a short position during the second hanging man candlestick as soon as the prices traded below the shooting star pattern, whereas more conservative traders would have waited for prices to trade below the first hanging man candlestick, and even more conservative traders would have waited for a whole candle to trade below the pattern. Here we can see once again Zillow on a 20-minute chart, with a very strong uptrend and a lot of bullish sentiment behind the stock. Then we see our hanging man reversal pattern. This could be a good exit point for those in long positions, while those not in a trade would be getting ready to short sell the stock. The aggressive traders would be entering at this point where the prices trade below the hanging man reversal pattern, while the more conservative traders out there would have waited a bit longer to enter into their short positions. Either way, this would have ended up being a nice trade overall. So today we saw the shooting star bearish reversal pattern as well as the hanging man bearish reversal pattern. If I can give you a piece of advice, go look on the internet or go into your trading software and look over different time frames and time periods if you can spot any of these reversal patterns we talked about today. Check to see how you would have traded those patterns and keep that in mind for maybe future trading strategies. You'll probably notice that the shooting star reversal pattern comes up a lot more often than the hanging man reversal pattern, and according to me, it is a more powerful reversal pattern than the hanging man reversal pattern. Now remember that none of these patterns are perfect, so go look for places where you could see during an uptrend these reversal patterns and where the trade wouldn't have worked out, that you maybe would have lost money on the trade. Candlestick patterns are never 100% sure thing, and they should be used in conjunction with other indicators as well, such as pivots, such as volume, etc., all of which we will be talking about in future videos. Also remember to place your stop losses. Since there isn't a 100% perfect trade, placing your stop losses, which many traders out there actually forget a lot of the time, is just an insurance to protect you from too many losses further down the road. And if the trade didn't work out as you would expect it to work out, the stop loss is what's going to save you. Anyway, I hope you guys enjoyed today's video. I hope you learned something. Remember, leave me a thumbs up down below. I would really appreciate it. And if you have any questions for me, leave me a comment. And if I can answer them, I will. If I cannot answer them, I'll look it up and then answer it for you guys. Anyway, this was William Jordan from the Moneymaker channel. See you guys in the next video.